Good morning, students. Welcome back to our morning LVC classes of this very beautiful, very significant topic, subject of cost and management accounting. As I have been discussing right from day one of this subject, that this is a very, very important subject when it comes to the provisions relating to running business, managing business, the rules, the standards. Yes, there is no act relating to this, but there is a code. Code means there are defined standards like how you have accounting standards. We have cost accounting standards. So it is very interesting, and at the same time, there is a huge, huge scope. Whoever are planning to pursue industry as their career, for them, this is going to be a very integral subject in their career, in their knowledge domain. So let us start again. Before I take up this new topic, let me first take up your queries, questions, if any, pertaining to any of your previous topics. Yes, very good morning, Beda, Pooja, Shamli, Deepika V, Rajveer, Mustafa. Very, very good morning to you all and to everyone present. So, students, first tell me, what are your doubts? What are your questions? Or if you have any conceptual point relating to this subject, because now we are in the mid of this whole subject. So in case there is anything where now some confusion is created, there is anything for which you still have some queries, some doubts, let us first take up your queries and doubts, and then I will start with this present topic. So students, let me know your queries and doubts. Yes, good morning, Medha, Shri Kumar, Geeta. Chalo, let me know your doubts, students. Mustafa, what is TYK? Yes, Beta Medha. Whatever chapter it is, you may ask. So Mustafa, please put your question. So ask your question relating to ABC. Yes, Medha, ask your question relating to materials. But put the question. Ask your question. Ask your question. What doubt you have? Put your question. If you want, I'll unmute you. You can ask me upfront. So Mustafa, ask your question, Beta. What is your question? Please ask. What you haven't understood. Yes, Jaya. So Jaya is asking, if I have understood correctly, what is inventory stockout? See, stockout is a situation where you have a demand for your material, for your final product, but that material or that final product is zero in stock. Now, since it is zero in stock, you will not be able to fulfill the demand. Like for material, you have a demand for material in the production process. So you'll not be able to run your production because there is no material in stock. Or if it is finished goods, it means the demand is for the sale of finished goods. So you have customers putting demand, but you are out of stock. Simple example of this, whenever you place orders online on various apps, many times when you select a particular product and put it in your wish list or put it in your cart or shopping bag, many times they display that it is out of stock, it is sold out. So what we do is we just put it in the wish list or in the cart for the time being, and whenever in future again you visit the product and you find that yes, it is available, you place the order. So this position that today when you have placed the order or you want to place the order, the product is not in stock, that is what is beta out of stock or inventory stock out. Medha, I'm trying to unmute. Yes, Medha, please go ahead with your query.
Good morning, sir.
Very good morning, Medha, tell me.
सर क्वेश्चन मटेरियल कॉस्ट में क्वेश्चन नंबर 6 में मैंने
हम्म,
स्टेटमेंट शोइंग मटेरियल कॉस्ट में सर उसका जो फर्स्ट है ईओ की वो तो निकाल लिया, बट सर जब
ठीक
सेकंड
है।
वाला पार्ट आया तो ऑर्डर साइज भी मैंने कर लिया, एनुअल परचेज कॉस्ट, एनुअल ऑर्डर कॉस्ट, एनुअल कैरिंग कॉस्ट, टोटल मटेरियल कॉस्ट तक आ गया, बट एक्स्ट्रा कॉस्ट सर फर्स्ट वाला जो एक्स्ट्रा कॉस्ट है वो मतलब निकाल दिया मैंने, बट बाकी मुझे समझ में नहीं आ रहा है बिकॉज वो आंसर मैच नहीं कर रहा है।
ठीक है, तो ये आपको एक्स्ट्रा कॉस्ट फाइंड आउट करना है, ये आप बोल रहे हैं।
यस सर, वो सिर्फ
तो
फर्स्ट
बेटा
वाला मैच कर रहा है, बाकी जो नीचे 100, 500, 2000, 4000, 10,000, 48,000 उसके कॉस्ट एक्स्ट्रा कॉस्ट सर मैच ही नहीं कर रहे मेरे, बाकी जो 2400 है उसके एक्स्ट्रा कॉस्ट मेरे मैच कर रहे हैं।
और आपका ईओक्यू इसमें कितना था, शायद 2000 था क्या?
सर फर्स्ट था 2400 जिसका एक्स्ट्रा कॉस्ट आता है 4800, सेकंड था
नहीं नहीं,
आर ओ
ईओक्यू
क्यू
कितना है, ईओक्यू कितना है, ईओक्यू कितना है?
सर 2400।
हाँ, सो 2400 इज ईओक्यू। अब आप जो पहला वाला क्वेश्चन आपने बोला आपने मैच किया, तो पहला वाला ईओक्यू 2400 का आपने कॉस्ट किससे मैच किया? आपने किससे मैच किया वो जो आपने बोला मैच हो रहा है? सी, आप दो चीजों को मैच करते हो मेधा, ईओक्यू वाले इसका रो का टोटल कॉस्ट विद द टोटल कॉस्ट ऑफ आरओक्यू। अब आपको आरओक्यू के ऑप्शन क्या है, 100, 500, 1000, 1500, 2000, करेक्ट? ऐसा ही है ना कुछ, मेधा? व्हाट हैपेंड टू मेधा? मुझे जो समझ में आ रहा है मेधा, आई थिंक यू हैव compared or taken difference of wrong values, that is why it is not matching. तो आपको डिफरेंस लेना है ईओक्यू के टोटल कॉस्ट का विद द टोटल कॉस्ट ऑफ ऑल अदर आरओक्यूज जो भी है, 100, 500, 1000, 2000, etc. Then it will match. Yes, Jaya. So what is your question? I understood. So Jaya is asking about illustration 7 from the materials chapter, in which she has asked for inventory stock out. So Jaya, I explained inventory stock out. Now, what is your question? So what I understand is there is a question in module, which is illustration 7. And in that, okay, let me just check if I have this module available with me here itself. 1 second. Materials, module. Okay, I may not have downloaded the module. I think I have. It's no. Okay, let me see if in the previous batch notes I have downloaded module. Okay, so there is module. Let me just check if the illustration of the previous module and your illustration same. You said illustration 7. This is which one? This is 5. Okay, it is same. So it is this question you are talking about, beta. Correct? Jaya? Now, students, this is a very interesting question. And what is this question dealing with? That there is a company which trades in the tires and tubes required for four-wheelers. Now, understand the question. It stocks sufficient quantity of tires for every vehicle. In the year 22-23, the report of sales manager revealed that the company experienced stock out of tires. Now, this is the stock out data. What is the data saying? Now, see, first understand what this data is. So, compare it with the online example which I gave you. So, let us say I am this supplier, I am this company, Tyro Tubes. You all are the customers, and you are visiting my website or through some app, you are trying to place order. Now, whenever you are trying to place order, you click and you try to place order, and at that time you get the message that this is out of stock or it is sold out. Correct? So from the number of clicks the customers are making, I get to know how many times the customers tried to place order, but we could not accept the order because we were out of stock. So this number of times of out of stock is number of times the customers, different customers tried to place order, but we said no. Why? Because our stock was not there to fulfill the demand. Now understand this. When it says 0, it means 33 times there was no such stock out. Stock out was 0 means there was no stock out. It means 33 times you were able to fulfill the demand. 30 times there was a stock out of 10 units. Means if anybody is placing order for quantity below 10, you are able to accept it. But where the quantity was 10, you are not able to accept. It means you are stock out 30 times during the period, that is during the year. And that was for 10 units. Similarly, 20 times during the year where the customers tried to place order for 20 tires, you were out of stock. It means 20 times during the year or 20 customers during the year were trying to place order and of how much quantity? 20, but you said no because that much quantity was not there. 10 customers were trying to place order of 50, which you said no. 5 customers were trying to place order of 80, which you said no. 2 customers were trying to place order of 100, you said no. This happened throughout the year. Now, what is the solution for this? Any company will say, boss, why am I having stock out? Because I am not having sufficient stock. Because whenever a customer visits and tries to place order, I am saying no. Why I am saying no? Because I am not having sufficient stock. So let me keep sufficient stock. Now, when you keep sufficient stock, it means you keep extra stock so that whenever a customer is placing order, you should not say no. You should not say it is sold out or out of stock. Now, in this case, we have to compare two things in this whole working. What are those two things? If I say no, that is what is if I'm stock out, what is the loss because of that? So the loss because of stock out is simple. Had the customer placed the order, you would have earned profit. So because of saying no, what is your loss? The loss is the loss of profit, which you now cannot earn because you cannot make the sale because you said no because you are out of stock. How much is that loss? The loss is rupees 150 per unit. Similarly, instead of this problem, the solution is what? You keep extra stock. But we all have studied in an entire material chapter that when you keep more stock, you incur carrying cost. So the solution of this stock out is keep more stock, but keeping more stock is also having a cost. The cost is the carrying cost, which is rupees 50 per unit to carry, that is to stock the material. Now here, what in this table we are trying to do is we are trying to make a comparison as to what would be my total cost in this scenario. Now, the question is how much extra stock should I keep? Simple, whatever demand I miss. So I can keep 10 units in extra stock. If I keep 10 units in my stock extra, I will be able to meet this 30 customers demand as well. If I keep 20 units extra, I will be able to meet the demand of these 30 customers also and 20 customers also, because when you keep 20, definitely you will be able to supply to these 30 customers also. Plus you'll be able to supply to this 20 customers also. Similarly, if you keep 50 units extra in stock, you will be able to supply to these 30 customers, 20 customers plus 10 customers. Same thing, if you keep 80 extra, you will be able to meet the demand of all these customers. So this is what we have to understand. So what they are trying to do is safety stock level. So safety stock means the stock that you are keeping extra. So let us say you are keeping 100 units extra. If you are keeping 100 units extra, what is your stock out chance? The answer is zero. Why zero? Because if you keep 100 units extra, you will be able to meet demand of all these customers. So your stock out units will be zero. Now, what is this probability 0.33? This is what you need to understand. From where do we get this probability? This probability you get by making a total of this. So you make a total of this. How much is this total coming to? 5 plus 2, 7. 7 plus 10, 17. 17 plus 20, 37. Plus 30, 67. Plus this 33 is 100. So you have this as 100, and then you divide 100 by all these quantities. So you get this percentage of probability. So like if you divide 100 by 33, sorry, 33 by 100, you will get probability of 0.33. Then here it will be 0.3, 0.2, 0.1, 0.05, 0.02. See, so these are the probabilities that are given. Now, depending upon what safety stock level you maintain, that will ensure what will be the probability of you incurring a loss. So this is what you have to understand. So let us say I start with this. If you keep safety stock of zero, that is you are not keeping any extra units, then you will be losing all this demand. 100 units demand, you lose 80, 50, 20, 10. You lose all. And what is the probability of there being demand of 10? That is the figure given against 10, which is 30. So it is 0.3. Of 20, it is 0.2. Of this 0.1, and so on. Similarly, if you keep stock of 10 extra, then you will only miss the demand which is beyond 10. Now, how much is beyond 10? Beyond 10 is 20. Now, interestingly, even within 20 also, you'll only miss the demand of 10. Why? Because out of 20, you will be able to supply 10. So please understand this. When you are keeping the safety or extra stock of 10, firstly, this demand will be fulfilled of 10. Out of 20, you will be able to meet 10. So how much will be stock out? 10. Out of 50, you'll be able to meet 10. So how much will be stock out? 40. Out of 80, you'll be able to meet 10. So how much will be stock out? 70, and so 90. And then again, multiplying by the same probability. Again, these probabilities are of 100, 80, 50, 20. Similarly, if you keep extra stock of 20, you will be able to meet the demand of 10 and 20 fully. And out of 50, you'll be able to meet 20. So 30 will be stock out. Out of 80, 60 will be stock out. Out of 100, 80 will be stock out. So that is this. And again, these are the probabilities of 100, 80, and 50, and so on. So Medha, if you understand this, you'll understand this table and the calculation. Sorry, Jaya. So I hope Jaya, your doubt, Ishwarya, your doubt, because you said you also had doubt, is clear. Yes, Deepika. So I hope all your doubts are clear. Fine, students. I hope so. This issue is resolved now. Jaya, but I cannot repeat everything again and again, because then it will be too much time and we will not be able to proceed. So please focus whenever I'm explaining. Ishwarya now, but I'll take that later, because then we will get stuck up in this chapter only. Mustafa, but then I'll have to see the question. And right now I have not downloaded this chapter, beta. So if you can put me the question, I'll answer. If I have to see the illustration better, then I'll have to download first the topic. Okay. So let us now start with today's topic of cost accounting. Is there some problem in net? Good, Medha. So you got to know what was the mistake and now it is corrected, right? Now, let us go to this topic of cost accounting. Now, see, our subject, if you'll remember, students, was or is rather cost and management accounting, which means cost accounting also and management accounting also. Now, in this subject of cost accounting and management accounting, till now, whatever topics we dealt with were all topics relating to costing. Why costing? Because in all these topics, what you were doing was you were trying to compute some or the other cost. So initially, we computed the cost relating to all the elements of cost like material, labor, overheads. Within overheads, you had two methods. One is the original method, which we studied in the overhead chapter, and then the new method, which we studied in the ABC method. Then you would have studied other methods of costing, which are applicable to different industries like process, like service sector, etc. Now, today what we are studying is not costing, because costing you study in all other topics. Today, what you study is cost accounting. But before I start explaining you cost accounting, the entries, etc., let us try to have a comparison between financial accounting and cost accounting, so that you will be able to understand and appreciate the difference between the two. Now, understand, students, the purpose of financial accounting is knowing your financial positions, and financial positions you get to know from two things. One is the trading P&L account and the other is the balance sheet. Now, when we say trading P&L account and balance sheet, in order that you are able to prepare these two things, you first need to have four types of accounts. What are these four accounts? You should have the income accounts, the expense accounts, the asset accounts, and the liability accounts. So that at the end, these two can be transferred to what will then become your trading P&L account, and the balances of these two can be collated and it will become your balance sheet. Originally, we had balance sheet in the horizontal format. Now you have it in the vertical format. But I'm using horizontal just for ease of understanding, because right from standard 11, you all are accustomed to balance sheet with the horizontal format. So understand this. Financial accounting's purpose, objective is to show the financial position of any entity, and hence that financial position will be reflected by two basic financial statements: the income statement and the asset liability statement. And in order that you are able to prepare these two financial statements, you require broadly these four accounts. Now, as against this, the objective of cost accounting is not to know the financial position of the company, of the entity. Rather, it is more interested in knowing the cost of each product. It is more interested in fixing the price of each product, in doing cost control, cost reduction, in enabling the management to do decision making. And yes, identifying profit, but of each product, not of the entity, because that already financial is doing. Now, in order that we able to satisfy our objectives, our means cost accounting objectives, we have designed our financial statements and we have designed our books and ledgers. Now, in order that we are able to find out cost of each product, fixed price of each product, do cost control, what we have done, these expense accounts, if you see in your financial books, they include purchases, they include wages, salaries, rent, repairs, depreciation, printing stationery, and a huge list of more than 50 plus expenses. Correct? However, when we talk about cost accounting, the expenses account in cost accounting is only limited to broadly our expenses are three, as you know, material, labor, and expense. And then for the purpose of costing and cost accounting, we have material, labor, and then three overheads. So production, administration, selling, distribution. So in cost accounting, instead of having 50 accounts of expenses like how you have in the financial accounting, we categorize our expenses into these broad heads, these broad accounts. Now, bifurcating the expense in these accounts will help me in doing costing also, will help me doing controlling also. How? We have already studied respective chapters of material, labor, overheads. So in each chapter, you have studied the controlling part of each of these expenses. And in order that you're able to control each of these expenses, you should first record each of these expenses separately. Hence, we have these 5 expense accounts. Now, in order that I'm also able to do costing, fixing the price of the product and controlling cost of each product, now for the first time in your accounting, you will be studying the product related accounts. Why I'm saying first time? Because till now in financial books, we have never prepared product accounts. Now we need to prepare each product's account. If you are doing your working is job based, then each job account. If your working is batch based, each batch account. If your working is process based, then each process account. Now, these accounts that we are preparing for each product, each job, each process, that is what is the product accounts. Now, each product is divided into 3 accounts. Please pay attention. While the product is under production, we will call it as WIP, that is work in progress. So visualize this. Your product is in the factory under the production stage. So until it is not produced, until it is under processing, under production, we call it WIP. Once the production is complete, it becomes finished goods. So just for visualization, until the product is in factory, you will show the product related costs in the WIP account. Once the product is completed in the factory, it becomes finished. It will get transferred to stores. So the account head is finished goods account. And just for your visualization purpose, remember that the product will right now be in your stores. So finished goods account is the second stage of the product when the product is physically lying in stores. And then when the product gets sold, now physically your product is with the customer. So on getting sold, we show the product related cost in this account called as COS, which stands for cost of sales. And finally, at the end, we need profit and loss account. Now, this profit and loss is different from your financial accounting trading P&L. Hence, to distinguish and just that you understand that it is different from your financial account P&L, we intentfully call it as cost P&L account. So, something which is different from your financial accounting. First, instead of those 50 plus expense account, we have only 5 expense account. And we have for the first time product accounts and for each product. So if you have 20 products, then you'll be having 60 accounts. Why 60 accounts? Because for each 20 products, you'll have WIP. Again, for the same 20 products, you'll have FG. And for the same 20 products, you'll have COS. Because each product will be in 3 stages. First, it will be under production. Then after production is complete, it will lie in your stores until it is sold. And finally, it will get sold. So depending upon the stage in which the product is, you will show the product in 3 accounts. Fine. Now, interestingly, these purposes of cost accounting, that is, knowing the cost of each product, fixing the price, undertaking cost control, cost reduction, helping the management in decision making, and also finding out the profit and loss of each product. All the 5 objectives are satisfied with these accounts. So once you prepare these accounts, all my 5 objectives will be satisfied, because from here, I will know each type of expense, which will help me in cost controlling. And also these expenses, I will be able to charge to my products. So it will also help me in costing. By preparing these product accounts, I will be able to find out cost of my product, because all these expenses I'll be charging to these product accounts in stages. So I will be able to find out my cost of product in stages. Since I'm finding out cost of product in stages, it will also help me in doing cost control, cost reduction, because I will get cost of product stage wise, while it is under production, while it is finished, and while it is sold. So it will also help me in cost control, cost reduction. And since I'll get total cost, so I will also be able to fix my price. Further, this P&L will show what? It will show the COS, that is total cost, that is cost of sales of each product. So let us say it is product 1, product 2, product 3. So I have total 20 products. Because of this 20 separate accounts for each product, I will get total costs of each product separately. I have sales data, which also I can easily bifurcate product wise. So in my cost P&L, on one side, I'll have total cost of each product. On the other side, sales value of each product. Now, by simple straightforward comparison, I will be able to find out profit and loss of each product. And it will also help me in decision making. So what I'm trying to explain is the purpose of cost accounting, the 5 objectives are very well catered, served by these accounts. In short, for cost accounting, all objectives, we only require these accounts. 3 for products, 5 for expenses, and finally the last one, cost P&L. Now, interestingly, with these accounts, my cost accounting can be done. However, there is one small problem. The problem is we followed double entry principle in accounting. Now, when we say accounting, it may be cost accounting, it may be financial accounting, whatever accounting you are doing, you follow double entry principle. Now, presently, whatever accounts we have drawn, all these accounts will cater to my cost accounting objectives. That is fine. But there is one small hitch, one small problem, one small hurdle, that I cannot complete double entry. How? I'll explain. Let us say you purchase material. So whenever you purchase raw material, packing material, it is purchase of material. So it is debited here. So just for your understanding, this is what is called as your purchase account in your financial accounting. Instead of calling it as purchase, here we call it as material. Now, this account is debited. Fine. But only one entry is not sufficient. Whenever you make purchase, you require a cash account or a bank account or a creditor's account where the second effect of this can be posted. So debit is the purchase account, which is over here, the material account, and the credit are your cash account or bank account or the creditor's account as the case may be. Similarly, you have wages, you have salaries. Within wages, you have direct, indirect. So all these accounts which you open in your financial books, direct wages, indirect wages, or salary, all these accounts are called as labor account or labor cost. So all these are actually costs, material cost, labor cost. Now, whenever you pay wages, you'll debit this. Whenever you pay salaries, you'll debit this. Or even if any of the wages, salaries is outstanding, still this account is debited. Now, again, for credit, you'll require cash account, bank account. If it is outstanding, you'll require outstanding account. So again, the second effect is yet to be done. Same thing with overheads. Whenever you pay the overheads, you will require these accounts. Now, out of these overheads, now you know what overheads cover. It covers all the remaining expenses in your P&L. So it will cover depreciation, it will cover rent, it will cover light bill, it will cover printing and stationery, and all expense will be covered in overheads except material and labor. Now, you require again cash bank account to show the second effect whenever you pay these expenses, or for expenses like depreciation, you require the fixed assets, because we all know that one of the approaches of passing depreciation entry is depreciation debit and fixed asset account credit. That is the building account, the machinery account. So you require fixed assets account also. Further, for recording these sales, one effect is you have credited the sales here. But again, you need to debit something. What? Cash bank, or if the sales is on credit, you will require debtors account so that you can debit. So understand this. You require these different accounts so that you can complete the double entry. So these accounts are sufficient to complete the cost accounting objectives, but they are not sufficient to complete the accounting, because for accounting, I need to pass the second effect because we follow double entry principle. And for the second effect, I require these accounts. Now, if you observe what are these accounts, these are your assets and liability accounts basically. So except the stocks, what stocks you have? You have the raw material stock, you have the WIP stock, you have the finished goods stock. Except these three stocks, all other assets and liabilities accounts, we are yet to prepare, like cash bank, creditor, fixed asset, debtor, maybe capital and reserve. You require capital and reserve so that the net profit that you get over here can be again transferred there. So we require all these assets and liability accounts to complete the double entry. Now, here comes the most important part in cost accounting. What is that? There are two approaches to cost accounting. First approach is called as integrated. So if you see the heading in our module for this chapter, it says integrated, and the second is non-integrated. So you have two types of accounting: integrated, non-integrated. Now, what is this integrated, non-integrated? This is where all the discussions that we have done till now will help you to understand. So firstly, you understood that for passing cost accounting entries, you actually require only the accounts that appear on the left side of the screen. But for completing the second effect, you require these accounts also. Now, we have two types of accounting books. Financial, every business prepares, and you have been studying this from standard 11. Cost accounting, not everyone prepares. It is prepared by those one who require proper cost accounting and costing. And second, where this is made compulsory, like in case of companies, where the Companies Act has made it compulsory. So when these people for whom cost accounting is required or it is made compulsory, when they start preparing their cost accounting books, which will include these accounts, they have a question. What is that? Should I prepare two set of books, one for financial accounting, one for cost accounting? Answer is possible. Or can I merge both the books and prepare one set of books? Again, the answer is possible. If you merge both and prepare only one set of books, then the approach or method will be called as integrated. So in integrated, your financial plus your cost, both accountings are done in one set of books. And then what will be non-integrated? You will be having separate financial accounting books like what you studied in standard 11 onwards, and you'll have separate cost accounting books. So here there will be journal proper, purchase, sale, cash book, bank book, bills receivable, bills payable, and finally your ledger. Here you'll again have journal proper, and you'll have the respective books like the materials register, wages register, overheads register, and you'll have the cost ledger. So what we are seeing right now in front of our screen, these accounts are prepared in the cost ledger, like how you prepare your accounts in your general ledger here. Correct? Now, the second approach is to have separate set of books. So this will be a complete separate set. This will be a complete separate set. Acha, can anybody tell me what do you think in practice? What you, you will suggest to your clients? Which integrated, non-integrated? Tell me, students, which one will you recommend? Super. See, as students, you will prefer integrated. You know why? Because it appears that integrated would be easy. Why it would be easy? Because only effort will be required once. So as a student, definitely if I also have to think, I'll prefer integrated. However, practically everywhere, not an exception anywhere, everywhere, the method followed is non-integrated. It is not integrated, it is non-integrated. Students, just give me 5 minutes. I'll just be back. You can take a 5 minute short break. So we were discussing that in reality, the method followed is always non-integrated. Why? Firstly, let us understand what will happen if you are preparing integrated. It means you'll have only one set of books for both financial and for cost accounting. What accounts will be prepared? The accounts that would be prepared. Now, since we are having integrated, it means I need to prepare books in such a fashion that the purpose of both these accountings are satisfied. Now, financial accounting basically requires P&L balance sheet, and cost accounting requires all these things. Now, understand these students that whenever I am following integrated, if let us say, which many of you will feel comfortable to listen to, that okay, we should do integrated. My books, my ledger will have these accounts up to P&L. So by preparing these accounts up to P&L, my purpose of cost accounting is resolved. Plus, P&L will also give me net profit of the entire entity. So my first purpose of financial accounting is also resolved. So by all these accounts, my cost accounting objectives are resolved, and P&L, which is the end result of all these accounts, will also give me net profit of the entire business. So even my financial accounting's first purpose is resolved. Now in integrated, as I was just explaining, I require assets and liabilities accounts for completing double entry. So I've also opened all these accounts in the same books. So in the same books, you have these accounts and you have all the respective assets and liabilities account prepared separately. Now, from these assets and liabilities account, again at the end of the year, I'll be having some balance carry forward. Plus, you'll be having balance carry forward in your material, WIP, finished goods, which is stock, and the respective balances in these respective accounts, which will be the respective balances. Now, all this will together help me prepare the balance sheet. So, P&L and balance sheet both will also be prepared from all these accounts. So the purpose of financial accounting is also completely fully addressed. So this appears very convenient, but the challenge is, as rightly pointed out, just someone put me on chat. Yes, as rightly pointed out by Kuldeep, that this will be a very big problem for my business. Why? Because, as you know, all companies' accounts, especially those who are listed, who are public companies, are all available, hosted on the MCA portal. So it is available in public domain. Even for private companies, they have to give the figures. Plus, all these accounts are given to the shareholders along with the annual report. So all these accounts are in public domain. And the biggest problem with this is, rightly pointed out by Kuldeep, cost is the most secret information. In fact, it is many times an advantage of the company that it is having a low cost production, a competitive cost production. And if these all accounts are published, which happens in case of companies, they have to publish their accounts, all the sensitive cost data will be exposed to the world, which will be very, very uh, problematic, and it may also be critical for your company. So nobody would like to do this. Hence, practically everywhere you have separate financial books. These financial books will have the general ledger, like all these accounts, what you have learned to prepare: purchase, wages, salary, depreciation. So that will be shown in your P&L. Plus, you'll show all your sales and other items of income, and net profit of the business will be shown, and the balance sheet will show the assets liabilities. Nowhere the cost data will get reflected, and you'll have a separate set of books internally only for restricted people. See, cost accounting books is not even shown to all your directors. The directors who are running the company, they also will not have access to your costing until and unless that director has any such profile which requires him or her to know the cost. So that much secret is the cost data. So you'll prepare separately your whole costing books. So now in non-integrated, what will happen? We already have financial books separate, which you know, and then this book, which we are right now discussing, this cost ledger will be now exclusively for cost accounting. Now here you need to understand, if this is exclusively for cost accounting, again, what are the accounts that I'll prepare? All these accounts anyways I want for doing my cost accounting, I have to prepare. Now the only thing which I have to resolve is these accounts, assets and liabilities. Now, since my financial books are separate, the financial books has already covered all these accounts in detail in their financial books because they require it for balance sheet. I don't require it. As a cost accountant, I have no interest in knowing my cash balance. I am no interest in knowing who are my creditors, how much is the owings, who are my debtors, how much I have to take from them, etc. I'm not bothered. For me, only this much is what is my interest, which I'm getting. But as I explained, because of the double entry problem, I have to open these accounts. But what will happen? In non-integrated books, I will open all these accounts and I will open one account to represent cash, bank, debtor, fixed asset, creditor, capital, reserves, and all these assets and liabilities all into one account. So now non-integrated accounts will look like this. You'll have all these expenses account, you'll have all these product accounts, you have the P&L account, and you have one account to represent all the assets, all the liabilities. Now what will happen? You make purchase of material, material account debit. This is credited. This represents cash also, bank also, creditor also. You make payment of wages, salary, direct wages, indirect wages for all. This is debited. And one entry is passed here as credit. This will represent cash also, bank also, outstanding wages also, outstanding salary also. Similarly, you make sales, cost, P&L account is credited for sales, and this account is debited for cash, bank, or debtor entry. So this will happen in case of non-integrated. So in case of integrated, all these accounts are prepared and you have these accounts, separate cash, bank, creditor, debtor, asset, liabilities. In case of non-integrated, again, you have all these accounts, plus you have one single account for cash, bank, debtor, creditor, capital, reserves, etc. Now, this single account is here having a technical name. Technical name I'm coming to because I have not yet given you technical name for any of these accounts, but these have some technical names. But first, I wanted to explain you the entire accounting. So now, this topic of cost accounting, what accounts are to be prepared, you should first know the account so that you'll be able to understand the entries. So these accounts are common, irrespective of whether you are following integrated, non-integrated. So these accounts will remain common in both, in integrated also and non-integrated also. What will change between integrated and non-integrated? If it is integrated, you will have plus these accounts. So you'll have separate accounts for all assets and liabilities. If it is non-integrated, then along with these, you will have only one account for all assets and liabilities. So this is what is the cost accounting structure. And these are the two approaches of cost accounting. So in integrated, you'll have these accounts, separate accounts for assets and liabilities. In non-integrated, you'll have one account for assets and liabilities. And these accounts are common between both the methods of cost accounting. So this is firstly the broad structure. First, you need to understand this structure before we can go and discuss the entries and the transactions. So students, anybody has any doubts, question up to this point? We'll first discuss your doubts up to this point, and then we will proceed to discuss the further pointers. Tell me. Students, I'm waiting for your queries, questions. Anybody, any questions? Any point not understood? What are the different accounts? Because until unless you have understood what are the accounts, entries which are otherwise very simple cannot be understood. Yes, Shri, tell me.
Sir, just one thing. Suppose under integrated accounting.
Sir, sorry, Shri, your voice is very low. Can you just
Can you hear me, sir? Am I
now,
audible
now,
now?
perfect, perfect.
Okay. So just one thing. In under integrated accounting,
Hmm.
suppose the financial was final, so these expenses will cover in that.
Exactly. So what will happen in case of integrated? Now, the accounts that we used to prepare in case of integrated, like purchases, wages, rent, depreciation, will not be prepared. Instead, you'll have only these five accounts.
Yeah. And these five accounts will be captured in that financial, right?
Exactly. See, this we have been discussing from day one. So as I explained now also, purchase will be captured here.
Yeah.
Wages, direct, indirect, and salaries will be captured here. And then all expenses like depreciation, rent, light bill, printing, stationery, advertisement would be captured in these respective accounts.
Okay. Got it. Thank you.
Correct?
Yes, sir. Thank you.
Perfect. Yes, others. Anybody else? No questions? So let me proceed then. Now I'm sharing on the screen this topic notes. I'll be uploading it later as what we do always after the batch, after the class. But again, for the purpose of solving, please take a screenshot of this. So students, take a screenshot of this. 1 second. Yes. Take a screenshot so that when I'm solving, in case you want to refer back to the question, it will be there on your screen. Thank you, Mustafa. Done? Screenshots? So with this first question, we will try to understand. We will try to understand what entries are there, how postings are done, and I've purposefully selected a question which has some very special adjustments also. So this question covers basic plus some advanced adjustments of cost accounting. It is not that all questions of cost accounting will be same. Many times we have very simple questions in cost accounting without any such special adjustments, right? So screenshot done. One second. Mm. Students, take a screenshot of question 2 also. I'll first start with question 2. Just I want to take one basic question. So take a screenshot of question 2. Now take a screenshot of question 3, which is the most advanced sum. So instead of 1, I'm planning I'll do 2 and 3. So that first basic 2 and then highly advanced 3 will be covered. So 1 is obviously covered in this. So with these two questions, at least we will be able to have our entire cost accounting, all different adjustments covered. All right. So done. So instead of 1, let us start with question 2. Now the first point is, I'll give you the technical names of all these accounts. So the technical names are, pay attention. What I was calling as materials is called as stores, ledger, control account. So it is SLC for short. Even in exams, when you're preparing the account, write the full name and in the bracket give the short form so that you can use the short form henceforth. Then you have the labor cost control account, short form LCC. Then you have the production. You can call it as production overheads, factory overheads, manufacturing overheads. All these are parallel terminologies. So it is the production overheads control account. So POC. Now see, administration, selling and distribution are two separate. Many times in the question, they ask you to prepare a single account for administration, selling and distribution. If that is the case, you'll prepare a common account for administration, selling, distribution. Otherwise, it is separate. So the technical names basically have this word control, nothing else. Baki the name you all know. So these are all expense accounts. Now, actually, you will require only 2 to 3 lines for many of these accounts, but as a standard practice, you should have 6 to 8 lines for all these accounts so that you don't have to keep in mind where how many lines are required. But as you practice, you'll realize that out of all these accounts, only 4 accounts require 6 to 8 lines because they have multiple transactions in them. Baki remaining can be done in 2 to 3 lines also. So these are all my expense accounts. Then I have my product accounts, which is work in progress. And again, the word control, short form WIPC. Then you have finished goods control, FGT. Then you have cost of sales. Here the module does not use the word control, so I am also not using. And you have the costing P&L account. So CPNL. Now comes the most important part. So this much is common in any method of accounting, whether it is integrated, non-integrated. Now comes the next part, which is the difference between integrated and non-integrated. Now the first question comes, how will you identify in exams whether your method is integrated or your method is non-integrated? The answer is from this, because all these accounts are common. What is the difference is, if in the exams, the balance is given for cash bank, creditors, fixed asset, debtors, capital reserves in the sum, it means the method is integrated. But if there is one common balance given instead of separate balances, there is one single balance given for all these assets, liabilities, then you will come to know it is non-integrated. Now, what is this common account called? They call it as cost ledger control account. So it is CLC, or it is also called as general ledger adjustment account, GLA. So two terminologies may be used, either cost ledger control account or general ledger adjustment account. Now, in this question number 2, see what they have given. They say on 31st March, the following balance sheet of the company is there. The cost ledger shows following accounts. So you have the SLC, that is the material account. You have the WIP, you have the finished goods, you have the manufacturing overheads, that is production overheads, and you have the cost ledger control. This proves that the method is non-integrated. I'll just show you one of the sums of integrated so that you'll understand. If the question is of integrated, then the opening balance will have WIP, material, and finished goods. That is always there. But along with this, what balances they have given? Bank, debtors, creditors, fixed asset, depreciation provision, capital, and P&L. So depending upon what opening balances they are giving, you will automatically understand what method is followed, whether integrated, non-integrated. As I explained, practically it is always non-integrated, but for academic purposes and maybe if exceptionally somebody is using, hence you are also being taught the integrated method. So, like many times, small entities whose accounts are not published may be using integrated because one, since they are small, they are non-corporate, their accounts are not published. Second, since they are small, it is easy for them to not get into the hassles of preparing two separate books. So these are the reasons where integrated may be used. So even if it is used anywhere, it will be used in very small organizations whose accounts are not published anywhere. Now, since the cost ledger control balance is given, we understand this is integrated method. It is non-integrated method. And so we also prepare cost ledger control account, in short, CLC. This account is your cash accounts, your creditors, your reserve. So this account is all, right? Now, when we start solving the question simply requires basic accounting,
Good
right?
morning,
Good morning, Harsh. Tell me, beta.
sir. Your screen got stuck.
But
Nothing.
that happens, if you remember, in every class in the morning, this happens. This never happens in the afternoon or evening classes. And I've already mentioned this. See, morning, I don't know why people get up and the first thing that they do is they take up mobile phones. First thing which you should never do. Second thing, what you should never do, they start posting messages of hi, good morning, how are you? And plus posting videos, posting different memes, passing on different images. This is what blocks the internet, beta. So kindly bear wherever you want me to repeat something that I will do. Fine.
Okay, okay. Thank you, sir.
So students, these are the accounts that we require to solve a sum on non-integrated, which is majorly the things that is asked. Now, please keep at the back of the mind two things. One, what these accounts actually mean. So even though we are using some technical names, we should always remember what is the actual accounts. So this stores ledger contains ledger is materials, which represents your purchase accounts. This wages, salaries account, and then remember what these accounts represent. Okay, thank you. So students, as we were discussing, let us try to connect here again to the question that we had on our hands. So this one. So now with this question, we will understand the entries. We will understand the postings, the balancing. So what are we supposed to do is, now since the opening balance given is of cost ledger control, this shows that this particular question is of non-integrated. Now, as we all do in all our accounting sums, we first start with posting the opening balances, right? So now you have this. Somebody had last time informed me the function for showing parallel screen. Can you just repeat if I want to show both the screens parallelly? There was a function to play both the screens parallelly. Can anybody tell me again? So that swapping will be saved. Okay, Windows plus left hand. Okay, fine. Perfect. Thank you. So to balance brought down, it is 301 435. The next is of WIP. So to balance brought down 122365. To balance brought down 251945. Then manufacturing overheads by balance brought down TLC 220. Okay, students, now also pay attention. There may be a question where they may not give you this balance. Which balance? This balance may not be given. Now, if this balance is not given, please remember this is your opening trial balance. So whatever are the other opening balances, this has to be the net balance. So also remember this adjustment that at times when they will not give you the opening balance for your cost ledger account, it will be the net of the remaining balances which are given. So you have to simply add up all the debit, subtract if there is any credit, and automatically you can try this immediately on your calculators. Automatically your balance will be this, right? So keep this adjustment in mind. Now, one thing before I start with the entries. Now see, I had said that what we do in cost accounting is we have to charge the expenses to our products. Now for products, you have different accounts. For expenses, you have different accounts, right? Now, just this small thing keep in mind so that understanding the entries and postings would be easy. Now, as I had explained, WIP represents your factory. So whatever is your direct material, that is the raw material consumed, that you will be charging in WIP account. Whatever is your direct wages, which is the wages for the direct workers who are engaged in production, that also will be charging here. And whatever is the production overheads, which is to be charged, again production overheads, since it is dealing with factory, it will be charged here. So remember this, students, that whenever now we will be doing costing, you have to charge the expenses to your products. You have 3 product accounts. So just keep in mind which expense will be charged where. So direct material will be charged to WIP, direct labor or direct wages will be charged to WIP, and production overheads will also be charged to WIP. Then comes administration overheads. Administration overheads charged will be to finished goods. So wherever administration overheads charged figure is given, you will be transferring it to finished goods. And similarly, selling and distribution overheads charged figure will be going to COS. So remember this, that the expenses to be charged, these 6 expenses has to be charged to these 3 accounts. So where they will be charged, you have to keep in mind. I hope this is clear, correct? Now, I have posted the opening balances in the respective accounts. Now we can take up the entries. So opening balances are done. Now we need to pass the entries for the respective transactions that happened during the year. Now they have given you transactions for the next 3 months. Finished goods produced. Now this is interesting. You have never come across any such transactions in your financial books or financial accounting. All this happens only in cost accounting. Now, if you remember, I'd explain what is WIP account. WIP is your factory account. So until the product is under production, the product will remain here. But the moment your production is complete, what will happen physically? The goods will be shifted from factory to godown. So this transaction given in the question, finished product, or they may call it as finished goods produced. This represents that the manufacturing activity is completed and now your final product is ready. So what we do is we transfer it to stores. So physically the goods are moving from factory to stores. This is what this transaction represents. So it will be called as finished product. It may be called as finished goods produced. So what will be my entry? My entry will be, I have to transfer it to the stores, which is represented by my finished goods control account. So 210. So visualize your goods are moving from factory to godown. Now, if they are going to go down, so godown will be debited. So 2, 10, 8, 35. Correct? So this is the transaction for finished goods completed, finished goods produced. Then come manufacturing overheads, which you have spent incurred. So manufacturing overheads incurred. So this is your manufacturing overheads. Now there are 2 entries. One is for expenses incurred and one is for expenses charged. I had explained you above through arrows that the expenses charged will be transferred to the WIP account, but here the transaction given is of incurred. Charged, they will give you separately. See here, they have given you for charged. So when charge will come, we'll pass entry for the charge. Right now, it is only for expenses incurred. Now, when they are giving expenses incurred, it means you have paid the expense, so it is debit. So 2. Now, interesting, where will this entry be posted? So whenever you incur an expenses, debit is the expense, credit is your cash bank creditor, which here is represented by your cost ledger control account. So instead of cash bank or creditors account, what account we have here? Since we are following the non-integrated, we have one single account to represent all of these, and we have named it as cost ledger control. So this entry will be routed through cost ledger control. And the second effect will go here. So by production overheads control. So expenses incurred entries are this. Now another expense incurred is you have purchased raw material. Again, it is the expense which is incurred. So this is not raw material which is consumed. Raw material consumed entry is here. But this is the first entry when you have purchased the raw material. So you have incurred. Again, what will be the transaction? We will debit the material account and we will credit cash, bank or creditor. So again, we will credit this account, and the material account, as you know, is called as the stores ledger control. So this entry will have a debit effect in your materials account. So it will be 2 CLC and the amount is 123. Now comes the labor entry. Now labor, there are two types of labor. One is the direct labor, which is also called as direct wages or factory wages, and you have the indirect labor. Now remember students, for all labor we have one single account. Now this entry is for labor cost incurred. So you have paid the wages, both direct and indirect. So what you will do is, you will add up both these amounts because you have to debit the labor cost by the expenses incurred. So instead of passing two entries, you can add up both these. So total of this will come to 72,195. Correct? So again, it is expenses incurred. So labor account is debited and the entry will be routed through your cash, bank or outstanding account, which is represented by the CLC, that is the cost ledger control. So total 72,195. And the second effect will come to your cash, bank or outstanding account, which is represented by this account called as cost ledger control. So in this, the expenses incurred account is debited, that is the labor cost control is debited with the total amount. Now, interestingly, students, whenever this entry is passed, just back of the mind, you should know this includes direct plus indirect. Now, I had already explained above that this direct wages out of this total will be charged to WIP, correct? And the indirect wages, now we all know for indirect expenses, you have the overheads account, and indirect wages always goes to the production overheads account. So here, now I'll split both these figures. The direct wages will go to WIPC account. The indirect wages will go to the production overheads control account. So now I'll bifurcate and I'll charge this to two places. So direct wages 50530 is transferred to production overheads account. Sorry, it is transferred to the WIP account. I'm sorry. To labor cost control. And the indirect wages, which is 21,665, is transferred to the POC account. So indirect wages is coming here. Now, interestingly, this account is automatically closed because you yourself have bifurcated the total of this, right? So two effects of the labor cost. Firstly, you pass the entry for incurred by debiting labor and crediting the CLC account by the total amount. Then Whatever is the direct wages portion, you transfer to work in progress. That is where the direct wages is incurred, and the indirect wages you will transfer to production overheads. I hope this part is clear. Now, we have another transaction, cost of goods sold. Again, students, come back to the product accounts. So when finished goods were produced, what you did, you transferred the finished goods from the factory to the godown, right? Similarly, if you remember when I was explaining these accounts, I had said that when these goods are sold, they go to whom? They go to your customer. Customer is represented by cost of sales. So when they are saying goods are sold, so they are giving you the cost of goods sold. It will be transferred from this to the customer account, which is represented by the COS account. So my entry is now if you visualize the flow of goods, understanding these entries is simple. Now, since for the first time you are preparing product accounts, and that also in 3 parts, initially remembering these entries may take time. But if you apply the simple visualization that what is happening, so when you read the transaction, try to visualize the transaction, what is happening, understanding the entries, remembering these entries is simple. So while the product is under production, all the expenses required for production, we will be debiting here. Once the product is complete, we will be transferring it from this account to the stores, which is represented by finished goods. And once these finished goods are sold, they will be shifted to the customer account, which is represented by COS. So you need to know which entry in the question is talking about which transaction. So entry like finished goods produced, finished goods transferred to go down, all these entries means the same. It means you have to transfer your goods from WIP to finished goods. And cost of goods sold, these entries represents goods which are sold to the customer. So you transfer them from finished goods account to the customer's account, which is represented by COS. Correct, students? Now the entry is for material cost, which is to be charged to your production. Now this material which is issued to production is your raw material consumed or the direct material. Why? Because it is used in production. So this entry, as I had explained about through arrows, will be charged to my WIP account. How much is the amount? The amount is 127,315. So I will charge it here 127,315. So whatever is the material I have used for production, obviously, again visualize this physically also the material is moving from your material stores to the factory physically also. So when you consume material in production, you issue material for production, the material moves from your material stores. And see, since materials are kept in a place which is called as stores, hence instead of material they have used the word stores ledger, which means nothing but material. And when they are used in production, physically the material is sent from material stores to the factory. So we are also passing the entry whereby the material which is going out of the stores is credited, and since factory is receiving the material, factory account is debited. So following your accounting principle of debit what comes in, credit what goes out, we are having these simple entries. So entries are logical. Only thing is one, you should remember these technical names means what. So stores ledger means material, WIP means factory. So just remember like this. Second, visualize. On reading the transaction, you should understand this transaction is for what type of entry. Once you visualize that, passing the entries is then simple. Yes, it will take some time. It will take more practice to remember all these entries, but with 5, 10 sums, you will be master of this chapter. And all these things which appear today a bit technical, today a bit slightly not so comfortable, will become very easy for you. Now, the next transaction is of sales, and it is, sorry, sales return at cost. Now, interestingly, you had posted one entry where you had given the effect of goods which are sold. And now there is a transaction which is return of these goods. Now, whatever entry you posted for sales, obviously the entry for returns has to be opposite. So what entry we posted of sales? So when the sales happened, we said that the goods will go out of your go down to the customer. So go down was credited, customer was debited. Now, if customer is returning back these goods, what will be the entry? My customer account will be credited and my go down, which is represented by finished goods control, has to be debited because the goods will come back to my go down from my customer. So credit the giver and debit wherever it comes in or the receiver. So my stores, my go down is receiving back these goods. So go down debit and the giver, that is the customer, is credited. Similarly, the materials which I had purchased, I am returning it back to my supplier. So how finished goods can be returned back to us by our customers? Some materials which are defective, not as per my requirement, I am sending back to my supplier. Again, the entry is opposite of material purchase. So when material was purchased, we debited our materials account and credited supplier. Now we are returning back the material. So obviously my material account has to be credited. So materials are going back and they are going back to my supplier. So supplier, that is the creditor, is represented by CLC. So entry is stores account, that is the material account, credited. Why? Because materials are going out and the supplier is receiving back this material. So the supplier's account, which is represented by CLC, will be debited. See, students, except for one or two transactions, others are all your accounting transactions. Yes, but still, what is the difference? The names, the terminology is used, because that is obviously the difference between financial and cost accounting, that the terminologies could be different. Then you have manufacturing overheads, which is charged to production. Again, I had informed you that you have these overheads accounts, and just for simplicity, each overhead has to be transferred to each product. So this way also you can remember. So we have three overheads, we have three products. So each overheads has to be charged to each of the product. Now here they are talking about manufacturing overheads charged to production. So what I will do is, by the amount is 77,200. It will be charged to my WIP account. Now in this sum, students, you will find that they have given no data for these two overheads. So many times you'll find sums where data for some of the overheads are not given. So these accounts will remain blank. Now, since we did the first sum, I purposefully drawn these accounts so that you know that these accounts are to be drawn. But in one of the sums, either there would be no transaction given, or in some of the sums, they will even merge. So that much variation you'll have to do while solving the sum. So either you can prepare it, and then if nothing is given, you can simply put dash. Like in this sum, nothing is given, so I will put dash. Maybe in another sum, I will have some entry in both. In another sum, I may have a combined account for both. So that much variation you will have to follow. Now the last transaction is sales net of returns. So they are now giving you the entry for sales. Again, if you remember, sales, we had discussed that it will be credited to your cost P&L account and debited to the customer. Customer is again represented by CLC. So my entry is costing P&L is credited and my customer is debited. So this amount represents sales, and they have given it net of return. So it is good. Otherwise, both sides you were supposed to pass the entry first for gross sales and on the opposite side for returns. Instead, they have given you the net value. So they have reduced one entry So here, let's say sales. So it is 285. So all transactions are done, right? Now, now comes the main important part, students, that is the closing of these accounts. Now you have to remember that stores represents raw material, so it should have opening as well as closing. So the difference between both sides is my closing balance of materials. So chalo, use your calculator and give me these balances. Give me the closing balance of materials, students. Only one answer. Jaya says 294, 220. Good. Aditya, why your figure is so different? Please recheck, Aditya. Now, labor students I had already mentioned. We already passed both the side entries, so it is already closed. Now, interestingly, overheads. Now, please pay attention, students. In overheads, many times there is or there are two possibilities of how overheads are dealt with. One, the difference in the overheads account, the difference or the balance may be carried forward. Or second option or the second approach is the difference you will transfer to cost P&L. So whatever is my balancing figure, I'm transferring into cost P and L account. Now, firstly, let us understand what does a difference in the overheads account represent. So the difference in the overheads account basically represents the difference of under over absorption. If you recall overheads chapter, this was the last discussion in our overheads chapter, that the difference between overheads debit side, which is the overhead expense paid or incurred, and the credit side, which is the overhead expense which are charged. The difference between the two is your under or over absorbed overheads. Correct? This difference is posted to costing P&L. This is one common method. Second, another method which is done in certain sums is you may even carry forward this balance. So it will be called as balance carried down. However, in this sum, since nothing is given, you have choice of doing both. So Harsh has given me this figure, 25. Now, students, this balancing figure is representing under absorbed overheads. Try to recall overhead chapter where we had discussed this concept under over absorption and we saw how to deal with it in cost accounting. So this is what is the difference between the two accounts, that is the debit side and the credit side of overheads account, which represents either under or over absorbed. Since here the balance is on the credit side, it is under absorbed overheads. Correct? Okay, correct, Harsh. Yes, Deepika. Yes, Shamli. Correct, Pooja. Prajapati, this figure 166,575 is what? You are giving some earlier figure, but I don't know what figure you are giving. But again, Aditya, what figure you are giving, I'm not understanding. Okay, so this I have transferred to cost P&L. So without fail, kindly do the postings. Many times we happen to miss the other entry, so don't do that. Otherwise, later on, while closing the books and making the final entries, this could be a problem. So again, my overheads account, production overheads is closed. No entries here, so it is anyways closed. Now coming to my WIP. Again, WIP is the work in progress. So the closing balance has to be there. Similarly, there will be closing balance in finished goods. So students give me both these values. Acha, so better specify, na? So good. Prajapati has given me the closing balance of WIP. $166,575. Correct? No. 166,575. Correct, right, Harsh. Okay. Jaya has also given me for finished goods 282, 270. 282, 270. This is what Jaya has given me for finished goods. Please confirm, students, 282, 270. Good. So 282, 270 is the closing balance here. Now, important. Cost of sales, if you remember, I had explained above, is the total cost of my product, which is transferred to costing P&L so that I can get the profit or loss. So this difference of cost of sales is posted to costing P&L account below. So Jaya is saying 185.10. Harsh is also saying the same. 185.10. So 185.10 to COS. Correct, students? I hope everyone is getting these figures. Yes, Pooja, correct. Now, interestingly, now my costing P&L will give me net profit, which will now be transferred to CLC because CLC also represents my capital and reserve. So this difference will again be going to CLC, and this difference will represent the net profit for the whole year. So Harsh is saying, she says it is 79040. Same thing Jaya says, and same thing Ishwarya says. So 79040, which I will transfer by cost P&L, net profit 79. Perfect, students. Great. Great. Good, everyone. Very good. Now, all my accounts are closed, as you can see. What is only left is this account representing these assets and liabilities. Again, I'll do the balancing, and since these are assets liabilities, the balance of this will be carried down. So now you find out the balance of your assets liabilities account, which will be carried down. Okay, Pooja says 743065. Same Ishwarya, same Harsh. Jaya, why you have a different value? Seven four three zero six five is the value given by everyone, but Jaya, your value, the value given by you is different. 743065. Please check. Great. Others have the same answer, Jaya. So I think you need to recheck your calculation. Great. So student, this is how my entire cost accounting will happen. See this. I hope this is clear. If there is any doubts, please ask. Great. So students, I hope this is clear to all. Let us go to next sum then. Start now solving question 3. Now question 3 has some more details. What is that? Let us see. So I just for the time being show this screen entire. So again, we prepare our ledger accounts. In the ledger accounts, now you will find that same thing is happening like the previous sum. So it is SLC. Now I'm just using the short forms so that I can cover up the sums faster. POC. In this sum, if I remember, administration, selling, and distribution is combined. Students, you have to first use the entire long form, the complete name, and then the short form. Cost. In this sum, we'll have some very interesting adjustments. Now see, opening balances, what they have covered, SLC, WIP, FGC, and a new account is shown, building construction. Now, what is this building construction? In accounts, we also call it as capital WIP. What is this? Many times, the asset which we require for our business, the asset is also done by us. The asset is constructed by us. So whenever we are constructing our own asset, maybe the factory building, maybe the plant and machinery, till the time the asset is under construction, we open a capital WIP account in our accounting sense. And this is what is here called as building construction, so that you understand that This capital WIP is your building which is under construction, correct? So I open this account. Building construction account. And after this, I open my CLC account. Correct, students? So now let us start solving. First, I'll do postings of opening balances. Now here the figures are given in lakhs. So I'll also write amount rupees in lakhs. Correct? So to balance brought down, SLC is 80. WIP is 2, balance brought down 20. 2 balance brought down in GC is 430. Building under construction, the balance is 10. And the net balance of CLC. Even if this was not given, students, again I repeat, you can make a total of this. All debits total will be equal to this credit. Correct? So if you add up this, 80/20 is 100, plus 430 is 530, plus 10 is 540. See, so even if this is not given, which at times they may do, they may not given. Right? Let us proceed with the transactions. Now, what are the transactions? During the month, the following transactions took place. In material, they are giving you transactions of purchase, issued to production. Now, this is something new for you. This is new, but I am sure now you'll be able to understand. So what are the transactions given? Let us understand. So material purchase, material sent to production, material sent for maintenance, and material sent for building construction. Let us pass these entries. So for purchase by SLC, how much is the amount of purchase? It is 40. So the cash bank creditor account is credited and the material account is debited. I'm sure now this entry is very simple, convenient. Next, material which is issued for production. Again, you remember WIP account is what we charge this amount to. So to SLC, 50 rupees, that is direct material or raw material consumed, is posted to the WIP account. Now comes something new, general maintenance. So this is the indirect material. This indirect material will go to production overheads control account. So this material, which is general maintenance, we will assume this maintenance of machinery because generally machinery requires maintenance more. So since it is of machinery, we will post it to production overheads account because machines are used in factory only. And production overheads represents expenses of factories or expenses incurred in factory. Then material which is used in building construction, again, I'm sure you will understand this. We will transfer it to this new account of this question, building construction. Because obviously whatever material is used has to be charged to that account so that you get the total cost, right? So all transactions of material is done. Now coming to labor. Now in labor, students, in this sum, we have some interesting things to understand. So what it says, gross wages paid. Now when they say gross, it means both, direct plus indirect. And then in breakup, they are saying indirect wages is this much, building construction wages is this much. Now, interestingly, they have given you indirect wages, wages for building construction. But what about wages, which is the direct wages for production? This is missing. This is where this question becomes special, and this is why purposefully I have selected this question. So in this question, we have the figures of gross wages. Now, gross wages paid, we know the entry for gross wages is gross means direct plus indirect. So it will be debited to your labor cost account, routed through the CLC. This is 150, credited to CLC by same amount. Then out of this gross, they have given you the breakup that out of this indirect wages, which now I'm sure you remember, goes to POC. This represents the indirect wages portion. This is 40. So it is 2 LCC 40. And building construction wages will charge to building which is under construction. To LCC 10. But interestingly, very importantly, the wages is made up of direct, indirect. And what is missing is the direct component, which I'm sure you remember has to be charged to WIP. This is missing. This we have to charge here. But what is the amount? The amount will be the balancing figure. So when we make a total of this, we have seen in the previous question also, the total automatically matches because whatever is debit is what we charge. Now, you get the balancing value, which in this question comes as 100, which represents the direct wages. And just for your information, this is the balancing figure. It was not given in the question. This you identify yourself when you are doing this posting and this transaction. So this amount, which represents direct wages, is identified as a balancing figure and will be charged to the WIP account. Very good, Jaya. Yes, Ishwari, you can name it as building construction as capital progress also. No problem, but better is you name what is given in the question. Correct, Ishwari. Yes, Shri Kumar, very good. So you get this 100 rupees balancing figure, which represents direct wages. Hence, you charge it to WIP. Now again, this is complete. Now for overheads, what is given? For work overheads, they say amount incurred excluding above items, that is of material labor which is transferred, except that what you have paid is 160. Now again, whatever is paid is coming from CLC account because CLC represents cash bank creditor. So whatever overhead expenses I have paid is credited to CLC. Now, interestingly, they have given this figure which is absorbed in building construction. So out of this total overheads, whatever is incurred, some part is for building construction. So that we will post to building account. Building under construction account, that is the capital WIP account. Now again, what is interesting here, students, is they have given you the figure of what amount remains under absorbed at the end. As you saw in the previous question, this is the balancing figure we get, but here they have given you the under absorption amount. So the under absorbed overheads amount is given. again you will find that something is missing. So what is missing? Most importantly, see, this is the overheads incurred. So you should have overheads charged, which we will post to WIP. This is missing. So again, we'll find this as balancing figure, but not now. Why? Because some entries are balanced here. So we will wait for those entries. And once all entries are done, then we'll come back to find this balancing figure. So overheads is also done. Now, for the first time students in the question, we have got this. What is this? This is a direct expense. In some question, they may call it as chargeable expense. So please understand that all this means the same. You should know the parallel names because many times in the questions, they purposefully use different names, but it means the same thing. Pay attention, students. In my expenses, I have the material, I have the labor, and I have all the three overheads. But there is no expense account for direct expenses, which is the royalty in this case. We haven't prepared and we never prepare. Why? For the simple reason that out of 10 sums, in one sum, you will get this adjustment of direct expense. Even when you are doing cost sheet, you will find this, that even in cost sheet sums, hardly in one sum out of 10, you find the adjustment given for direct expense. So since it is not regularly given, we do not open this account. But then the point is we have expense, so we need to pass entry. So pay attention. Let us say, had I opened this account, what would have happened? Firstly, I would have passed the entry for expenses incurred. So it would be direct expense account to CLC. That is the entry that we always pass for expenses incurred. So my entry would have been direct expenses and it would have been paid, so CLC. Next entry, what I would have passed, I would have charged this direct expense, and where it would be charged, it would be charged to my WIPC. So I would have charged it by this entry again. Now, since we are not opening the direct expense account, what we do is we merge both these entries. Now, when you merge both these entries, you will get a combined entry whereby the direct expense account being the same debit credit gets knocked off. And so you get a combined entry, which is WIP debit to CLC credit. So since direct expenses are generally not given in the question, we do not have direct expense account open. But if direct expense account is given in the sum, this is the entry which represents both. First, the expenses paid and then the expenses charged. So here I will write to CLC, but in the bracket, I should know this is what? This is direct expense, correct? So it is ₹5, the royalty. You may also name it what there is direct expenses. It is royalty, just for your reference purpose. Correct. Then you have this combined selling, distribution, administration overheads 25. Whenever they are simply saying overheads, it means they are talking about the expenses incurred. And expenses incurred is, posted now through CLC account. So administration, selling overheads combined, it is incurred. And then finally the entry for sales, 450. Right? So transactions given in the table are posted. Now they have given some transactions at the end. What is it? at the end of the month, the stock of raw material and WIP. So interesting students, they have given you the closing stock values. 55 lakhs, 25 lakhs. Now, interestingly again, we normally find out closing balance by doing the balancing. However, here closing balance is already given. It means we'll find some other balancing figure. So by balance carried down. So raw material account has 55 lakhs. Again, by balance carried down. WIP account has 25. Again, something will be missing, something which is missing in WIP account, you will identify because the closing balance is given, so something else would be identified. Now it is given the loss arising in the raw material account is to be treated as factory overheads. Now, if you see raw material account, you have opening, you have purchase, you have amount which is used as direct material, amount which is indirect material, amount which is in building construction and closing. So effectively, everything is given in this account. Nothing is balanced. Everything is there. Now, if everything is there, then the question is, what is the balance? It is some difference because of abnormal loss or abnormal gain. Here they are saying there is a difference which is a loss, and they are specifically asking you to transfer it to factory overheads. Now, when you balance, this side is 120, this side is 56, 60, 55, so it is 115. So there is a balance of 5 lakhs here, and they have asked us to transfer it to production overheads account. This is the balancing figure. So understand this, students. So as per the requirement of the sum, this balancing figure representing loss, I have to post it to POC, that is production overheads account. Had they not mentioned this, I would have posted this difference, which is obviously the difference of profit or loss here, to costing P&L. So if this would not have been mentioned, I would have posted this to costing P&L. But here I am posting it here on specific instructions. So my material account closed, my labor was already closed. In fact, I found the balancing figure from this. Now I come to POC. Now in POC, I have the amount paid, I have the material, labor and material entries, I have the overheads which is to be charged to building, and even the difference of under over absorption. But what is missing is the main amount, that is the overheads which is to be charged to my production. So again, this will be my balancing figure, the amount which I have to charge to production, because production overheads are to be charged to production. So tell me, students. Yes, Jaya, very good. So this balance is 183. Correct, Pooja. Yes, Medha. Yes, Deepika. Very good. So this balance is 183. Yes, Geeta. Yes, Prajut. Good. So this I will be posting to my WIP account, to POC 183. Correct? So this account is also done. Administration and selling, they have given nothing for charged. So I transfer it to cost P&L. So nothing is given for how much is to be charged. So I will transfer to cost P&L. So selling, distribution, administration, 25 is transferred to cost P&L. This account is also closed. Now, WIPC. Again, I have opening balance of WIP. I have material which is used for production, direct labor, direct expense, production overhead. So debit side is complete. Credit side, I have been given the closing WIP. Now, what is missing in the question? The main thing that whatever production is completed, we discussed this, it has to be transferred to my stores, to my godown. that is to the FGC account. So again, this is the balancing figure which represents the production completed during the period. Yes, Jaya, correct. Yes, Prajot, good. Yes, Medha. Yes, Shamli, good. So it is 3, 3, 3. It is 3, 3, 3. Very good, everyone. Right? 3, 3, 3. Very good. Shri, Deepika, Pooja, Prajot, very good. Prajapati, good. Now, interestingly, in finished goods, there are two things which are missing. Now, what two things are missing? If you remember, finished goods, we transfer to COS whatever is sold, and we also have the balance carried down. Now, in all above accounts, they had given the balance carried down, that is closing balance, so we could find the other figure. Here, both figures are missing. Now, when you come to the question back, first they have given the building under construction was completed. I'll come back to this in a minute. What is new again? Why I selected this sum? Because as I said, now this covers majority of your adjustments that you may get. So what it says, company's GP margin is 20% on sales. Now, interestingly, I know my sales, which is 450, but with GP margin given, what I will be able to find out, you will be able to find out. Now, this is a working note. Calculation of cost of goods sold. So sales minus GP is the cost of goods which I have sold. So if sales is 450, profit margin given is 20% on sales. So if you deduct profit from sales, what you get is the cost, and cost of which goods which are sold. And this is what students we transfer from FGC to COS, because this represents the cost of goods which are sold. So we transfer it to our customer's account. So this is as per working note 1, which we just prepared. And now you'll get the closing balance. Yes, Shri, correct. Yes, Jaya, correct. So it is rightly pointed out by many of you all. Yes, Prajapati, Medha, correct. Geeta, Deepika, very good. So it is 403. Now COS has no other value. And as you again know, COS is transferred to cost P&L. So 2 COS 360. And now here I will again have the balancing figure as my net profit. Yes, Shri, correct. This I'm getting as 65, which is again transferred back to CLC because CLC also represents my capital reserves account. So net profit 65, correct? So all accounts up to this is close. Now for building under construction, what they gave here, the building under construction was completed. Now if the building is completed, it will become part of my asset, and assets are shown in CLC. So I will transfer the total cost of building, which is now completed, to CLC. So it is coming as 44. And now finally, I'll have balance carried down of my CLC. So see students, in this question, you got to know so many things besides the cost accounting entries. We had so many other things like the balancing figures, then the new calculation of COGS, cost of goods sold. Jaya, okay, Jaya, thank you. Jaya pointed out that I missed out one thing. See, this happens, students, many times. So this 8, I had to post to cost P&L, which I missed out. Thank you, Jaya. So production overheads 8 will be posted here. If this is posted here, right? Because this was under or absorption, 8 will be posted here. So I'll get my new revised profit figure, which is now 57. Thank you very much, Jaya. So if this is changed, my closing balance will change. Correct? Yes. Thank you. Jaya, thank you very much. Okay. Prajapati is saying 483. I believe it is after this correction. Okay. Geeta says 483. Means it is after this correction. So it is 483. So see students, this is how this topic is so interesting. Yes, initially you may find it slightly challenging because of the new names, because of few new transactions, but with practice, you will be able to achieve it. Fine, students. I'll be uploading this sheet and you have to solve sums from your module relating to non-integrated only. We are yet to study integrated. So we'll be only solving sums relating to non-integrated, and majority of sums are non-integrated. So students, I think with this, we can close today's session. Thank you. Thank you very much. Next lecture, we complete the balance part in this and we proceed to the next topic also. So thank you. Thank you very much, students. Have a good day. Please practice all sums from module, but only the sums relating to non-integrated. Don't solve for integrated, though it is not so difficult, but only solve for non-integrated. Fine. Yes, Manish ji, we are done. Thank you very much, Manish ji. Good day all. Good day, Manish ji. Bye-bye.